What's up, guys? Welcome back to my channel. Hope you guys are really making money with my strategy. Today I'm actually back with the version 2 of the last strategy that I posted. As I did promise, I'm going to do the spike version of the strategy, how you can actually use it to catch spike. Right, so thank you very much for the video. I actually saw you guys review and comment. I really say a very big thank you to you all. You guys are my real MFP. Right, we are my real MFP. Right, so guys, I'm actually not going to be wasting your time. I'm just going to go how you use the strategy to catch spike, just like I've done justice to the scalping version of this strategy. So I'm going to be doing justice to the spike catching other side of it. And on this strategy now, I can actually beat my chest for you that you can be able to flip your $10 to $1,000 in as much as you apply risk management. I'm not joking, guys. That you can actually flip your $10 to $1,000. It might not really be the 1 week that I said, but you can flip it based on individual personalities, based on your experience. Right, experience is just what differentiates Mr. A and Mr. B. Mr. B might have spent 2 years in trading and I've not really gotten the real experience, and Mr. A could have just spent 2 months in trading and he has gotten the experience for the fact that he actually knew what he should know. He knew what the market is all about. But Mr. B has actually been running up and down. Ordinary market structure, so that's the difference between Mr. A and Mr. B, who can actually flip a $10 account to $1,000 account within a week. As a matter of fact, if you have $10 account, you don't need to start going to a high volatile pair. Just stick to pairs that are less volatile than you can actually build. So you can build a $10 account with. Right, imagine having 50 cents. It doesn't mean you can't trade. Having 50 cents and you know what you are actually looking for, you can actually build the 50 cents. But some of you like, it's not possible. I trade with $0.5. It's not possible. It's very, very possible. You can even trade with $0.25. It all matters on your experience and you knowing what you should know. You knowing the pair that will really do justice for you, that will obey your account size. So that's all you need to know. It's not about just saying overhyping that you can flip $10. No. So if you actually want to flip your $10 account, if you stick to spike catching, obviously it's going to be very difficult, and you gave yourself a good risk manager of not risking more than 3 pips to 5 pips just for you to get 15 to 20 pips. Because one good thing about BOM 1000 is that is a pair that the minimum spike you can have on BOM 1000 is nothing less than 10 pips, and in a worst case scenario you can have 8 pips. That's the minimum spike you can have on BOM 1000. So imagine risking four pips for you to get 8 pips. Is that not good? And that's ratio 1 to 2, and you keep doing that, and that is even when you are in an uptrend. You are in a downtrend, that's where you can have that. But if you are in a real uptrend, you can have 15 pips, 20 pips, 23 pips spike on BOM 1000. So this is the reason why I just like that buy. I like that pair, BOM 1000. I cross my heart for that pair. It's really very profitable if you know how to use it effectively. So I'm going to actually be giving you the version 2 of it on how you can scalp, how you can catch spike with this strategy, right? And I'm going to be doing an updated version of my envelope strategy. There have been an update in it. For those of you that know about envelope strategy, you all know that my envelope strategy is a killer strategy. As in, it's a killer strategy that that strategy, but I do my heart. So guys, so for this strategy now, how you can actually use it to catch spike is still the same way, just a little slight difference on it. I don't need to start bothering you with the settings. You are actually going to find the settings of the indicator we are using in my previous video. I'm going to attach the link at the end of this video so you can actually watch it and use it to set up your chart, and you can have the same thing like this, right? You can have the same thing like this. So meanwhile, if you are yet to subscribe to my channel, please, I beg you. But father, I've gotten over 1,000 subscribers does not mean I shouldn't be loyal. I'm loyal to you. Please just hit on that subscribe button and turn on the bell notification so that you still updated each time I'm dropping a new content, right? Each time I'm dropping a new content. So guys, the strategy now you can actually capital. We've analyzed that we're actually using, right? We're actually using the zoom level we are using. You can actually use zoom level 0 and you can use zoom level 2. This is zoom level 0. You zoom out completely, right? This is zoom level 0, right? For effectiveness purpose, I can actually advise you use zoom level 0. But one thing about zoom level 0 is that it's going to give you very massive profit and accurate, right? And accurate, because you are actually shrinking you are zooming in completely your chart, so you tend to see a larger part of the chart, and it's going to give you accurate, right? It's going to give you accurate results. All you just need to do is just for you to know what you're doing, right? And if you can apply your market structure, man, I can give you 99.9% accuracy on this strategy if you can apply your market structure and your normal price action. I just focus most on market structure. Is that as in that thing, but it be like say that the ABC, but you know, person won't start learning now, won't start going to school now, they will put you for pre-nursery and kindergarten. What do we teach you there? They won't teach you A for apple, B for B for ball, right? 1 2 3. That is the bedrock of trading. So if you don't understand that market structure, there's no way you are going to be profitable, because you end up buying when others are selling. So they tend to use it for liquidity. Instead of you grabbing liquidity, you beat the liquidity yourself. So that's why I can't overemphasize the power of your market structure. Many people just charge me, sir, if I'm buying now, the market is like, still the market is against me. Anytime I'm buying, they will be selling. I just look and I say, do you do your top down analysis? They will say, yes, I did my top down analysis now. Okay, did you do your market structure? So yes, I did my market structure. Okay, let me see your chart now. Now their problem will start. So market structure is king. The market structure is king, and you must be able to see your market structure in whatever strategy you are using. You must be able to see your market structure, right? You must be able to see your market structure. So the zoom level is zoom level 0 or zoom level 2. This is zoom level 0. This is zoom level 1. And zoom level what? Zoom level 2. So whichever one you want to use. Now, one thing about zoom level 0 that I said now is that zoom level 0 now you need to be more patient. The patient dog eat the fattest bone now. I mean, so no so now they talk am, you know, English people. Right? The patient dog eat the fastest bone. Right? So zoom level 0 will give you accurate spike, but you need to be patient. And one thing about you people now is that majority of us are not the patient type. So that's why I say you can actually use zoom level 0 or zoom level 2. So if you know you are the impatient type that you can't be patient, my brother, stick to zoom level 2, which is this. Right, which is this. So this one will give you accurate spike too, but sometimes you can have a lag in it. Sure, you understand? So you might not really get the accuracy that you want, but it's still going to give you 85% accuracy. So it's still A. It's still an A, right? It's still an A. So don't be saying I did give you strategy. We know cross 50%. No, me, I don't do that. Now classic would be now. So let's give you a classic. What? A classic strategy. So guys, so the zoom level is zoom level 0, and then the time frame is actually 1 minute time frame now. She's been as now spike one catch now 1 minute time frame we go use that now, so I can have that sniper entry. You got it. So that is it. And honestly, if you really want to enjoy this strategy, stick to boom 1000. Practice it on boom 1000, and you will give me your feedback. Some of you even buy me exotic and shawarma. Say, sir, your strategy is what? She understands. So that is the 3 criteria that we'll have. So for the settings, let me just do a quick recap on the settings. So the settings, we're actually using two indicators. The first indicator, we are using our main chart. The moving average is actually moving average 10 exponential. Alright, then we click on, you use any color of your choice. Alright, so that's the moving average we are using there. Right, that's the moving average we are actually using there. Right, so that's the moving average we are using our main chart. And then now for the indicator window, now the first indicator is our RSI. So the period is 100, apply to close, style is what. Now take note of this. Now the color of your RSI is going to be the color of your background. You can see my background is what? Is white. We are light, so we have to use white. So your background color is going to be white. Right, once you are done, you click on what? You click on done. Then the levels are what? 90 and 10 level. Right, 90 and 10 level. And if you are done, you click on what? You click on done. So for the RSI, we're actually using 10 moving average. We're using 10 moving average. Right, 1 2 3 4 5 6 7 8 9 and 10. So for this 10 now, this one is different. The RSI is the period is 1, the period is 2, up to what? Up to 10. Right, but the color now is what difference, right? The color is what difference there. So you can actually have a color here. So this color, you can actually use blue. This one is blue. Let me even show you, Seth. Let me show you. So this one is what? The color is blue. The method is, the period is 1, shift is 0, method is exponential, apply to what? Weighted close. Right, style is what? 4 pixel. Right, so the color is blue. This one, the color is green. Right, the period is 2. That's for the second one. The third one, the period is 3. The color is what? The color is green. The first one, the period is what? Is 4. Method is exponential. Take note, apply to what? Weighted close, HLC/4. Right, and then the fifth one now, 1 2 3 4 5, and the fifth one now, the period is 5. Method is exponential. Then the style is what? Is 4 pixel, and the color is what? Its color is red. So I think that's that for you. So the sixth one now, the color is what? Navy blue, or whichever color you want to call it. Actually, I don't know color. I didn't do color in my school. Throughout my school, I didn't do color, but I learned color in YouTube. That's when I get to know the primary colors. Don't mind me, I don't go school, but I pass. But I actually have my certificate. But I don't go school. So the period is what? The period is 6. Method is exponential, and then the color is navy blue or pink blue. Now my woman, they teach me color. Don't mind me. I know say woman sabi color very well. Now with the year say this one na sky blue, this one na kini bluish. She you understand? This one na onion blue. Woman get wahala. Alright, so you click on done. Then the seventh one now, make sure this is what? So the 7 up to the 7 and the 8th one, the periods are what? The color are the same thing. Right, that's the 8th and the 9th. Then it's on the 10th one, you now have a different color. So once you are done, you click on done. Right, so you have something like this. So your platform is ready for you to catch that spike, that massive spike. So the confirmation we're actually going to be using is that you look at very well now. You see all these indicators now, they must come and align at this 10 level, right? And the other time, someone was actually saying, what am I using the level for? Now, this is what I'm using the 10 level for now. So they must all align at this, this 10 level. So the moment you have them align at this 10 level, my brother, you shoot your shot. You know what we call that sniper shot? Sniper. Just shoot them. You have it, and you can actually see what we have here. You can see what we have. See what we have now. You can see so. And now I did a video on support and major support and resistance on boom and crash. Actually going to attach that video. That video too will actually help you out on this video, on this bike of a thing. If you actually want to enjoy spike catching, you need to watch that video. I'm going to attach the video at the end of this video. Just stay tuned, watch to the end. I'm going to attach the link to the video. You need to watch those. So there are some, you apply those level while placing your trade. Right, while placing your trade, you apply those level so that you can have that accuracy that you want. So you can see you have 21 pips now. Waiting at the look for 21 times 0.2. That's what. That's almost $4. If I'm not mistaken, that's $4 plus now. Now imagine now, you started like that, shaking it, shaking it, shaking it, shaking it. You have many of it, right? You have many of it, as many as possible. You can actually see this now. See this here too now. See this one too now. I see there you have. What do you have? That's 32 pips already now. So the secret there is that they must align, and if you can combine your institutional support and resistance, man, it's gonna be what? It's gonna be amazing, right? So the moment, if you want to what, you can actually see what we have here now. You have a 10 pips, right? So now one thing here is that now the another use of this moving average at the main chart, this blue moving average, is that once you are able to do your market analysis and you actually be confident that you're actually in an uptrend, right? Now you can actually once the price goes below this moving average, you can enter for a re-entry, and you target you target your spike, right? But maximum you don't risk more than 5 pips. If you're actually targeting a re-entry, right? Don't risk more than 5 pips. You can see this is another perfect one. You can see this is another. So the first spike he gave you, look at the first spike he gave you here, right? The first spike he gave you here, you did have what? As the moment the price come and touch this blue moving average, you have another massive spike. That's what I'm telling you. So you must have done your analysis very well. Do your market structure and your normal price action, your top down analysis. They are very, very important. So once you just do that, you have your money. Imagine that this is how many pips. This is over 30 pips. So that's one thing I love Boom 1000 for. I see that pair. I dope my heart for him. That's 69 piece, my brother. How more? If you put one standard lot, that's $69. A standard lot, that's $69. Right, this is another one. Look at another one here. Another one. So let me now give you another pro tips on using this strategy. Now, if you know your divergence very well, it's actually going to help you here. It's actually going to help you with this strategy. And don't forget that trading pattern I actually talk about, your W. This is what this indicator is doing for us. It's still spotting our W for. You can see the first leg, the second leg. See now, it's still what it's still pointing out for you. It's all about knowing what you are actually doing for. So meanwhile, guys, do your back test very well. I don't want the video to be too long. I don't want 20-minute video. So see another one. It's actually giving you the same thing, your W. So if you know your market pattern very well, once you see your W, you see the first leg, my brother, enter now. Just enter, and then you just what. Remember, don't forget what I said. How many pips are we using as stop loss? Don't use more than 4 pips, 5 pips maximum, right? So we actually enter when you have this first leg. 1, 2, 3, 4, and you have your spike. And when you have what, a re-entry will always be when there is what, when this price touches moving average. You can see the strategy is very accurate. All you need to do is just for you to sit down, do your price action, do your market structure, do your technical analysis. It's still the same thing, It's still the same thing, So do your market structure, do your technical analysis, and you have this amazing spike. This is over 40 pips. I'm not even mistaken. Let's calculate now. That's 35, 38, what, 39. Using one standard lot, that's $39, my brother. Now money over here in my country. $7 don't reach 700 now. Now go save us. Look at another one here now. So you just need to do your what? Once you can see your W. The other time I was in that video, should I say attach that link to the trading pattern, that W pattern, so you can learn it. I think I'm going to attach that one too, so that you just learn this W pattern. W pattern is a very powerful pattern. Even I don't even sabi any pattern for trading. You see that W and M or more killer pattern. No, if you sabi now dogu you be. So guys, do your back test very well. There are a lot of it. See, you can have as many as possible, and you can flip your $10 to $1,000 within a week, depending on you, depending on your personality. Because by the time you now build the account to $500 now or $200 now, you now start using 5 standard lots. No be mumu be that. And mumu be that now, because a single spike now, okay. You use 5 standard lots, and you know have your stop loss in place for like 10 pips or 20 pips. Some of you are like, it's going to strike, it's going to, but when you've not even done your top down analysis, you now keep waiting, you keep waiting. And I like the rate very well. The rate will just pack what it don't give you. So even that more you won't be. So guys, do your back test very well and make sure you apply serious management. This strategy is a very killer strategy for catching spike. Very catching spike. So meanwhile, if you are here to subscribe to my YouTube channel, please do where to hit on that subscribe button and turn on the bell notification so that you still updated each time I'm dropping a new comment. Guys, I'll be waiting for your review. I'll be waiting for you. So guys, please, now I beg you now, don't just subscribe to my channel. Once you watch my video and you find it very interesting, please do where to reshare. Share to tell any trading telegram groups that you have or any WhatsApp group that you have. Some of you that have the TikTok type, you can even still cut and do TikTok. Just apply my link there. Just apply my link, because if I find out, I go tag you for copywriting. Copywriting, I go flag you for copywriting. And for the one you are the type that you actually use Twitter, beg, just if you find any trending news, attach my video link, just attach them there, tag me there. That's the way you can actually help me. And pay me back in my coins, since I've been a little help. No matter how little, I don't help you with my strategy. You understand? So please do it to replicate. I do it to replicate by sharing my videos to any of those social media platforms. Right? Thank you very much. See you. So let's keep making the rev. As a matter of fact, trading is fun if you know what you are doing. See you guys. Welcome guys back to my channel. Right, so today I'm back again with another powerful strategy that we can use to scalp 1,000, crash 1,000 and 1,000. So if you actually want to make $10 to $1,000 weekly, then this video is meant for you. Right, actually want to make from $10 to $1,000 to $10,000 weekly targets, then this video is meant for you. Right, so I'm actually going to be sharing a very powerful strategy that you can use to trade crash 1,000 and from 1,000. Right, so personally now, I'm talking from experience now. If I actually want to scalp the volatility, that I want to scalp boom and crash, of course I love using crash 1,000 and 1,000, all because they actually give very good return of profit on scalping. So that's why I always anytime I feel like scalping the market, I always use crash 1,000 and 1,000 because of their return that they give out on scalping. Right, so today the strategy is a very simple one and very fun and very profitable, because it's actually going to be a massive one for you once you follow the rule. Right, so meanwhile you are here to subscribe to my YouTube channel, please do turn that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. So, right, so you can also join my Telegram channel. Right, you can also join my Telegram channel, right, where I do say signals and all the other trading tools that can make your trading a profitable one. And meanwhile, I'm actually going to be starting a signal group, a weekly signal group. Right, so if you are interested in it, you can actually join my Telegram channel and comment in the discussion section that you are interested in it. And if you have my contact, you can check my description, you can check the description of the video too for my contact, so you can chat me up personally on my WhatsApp or my Telegram channel. I'm going to be responding. So we'll start the signal group hopefully before middle of this month, depending on the feedback I got, because I've actually gotten a lot of people saying they've been trying to grow their account, they are unable to, this and that, they are trying to raise money for mentorship, this and that. So if you are interested in the signal group, it's actually going to be on a weekly basis or by week basis. Right, so if you are interested, just chat me up on my WhatsApp and ask for the terms and conditions for the signal group. So meanwhile, but the strategy now, right, the strategy is a very simple one that you can use to scalp crash 1,000 and boom 1,000. Right, So without wasting much of your time, guys, I will be walking you guys through the what how you will use the strategy, right? Then at the end of the video, toward the end of the video, I'm going to drop the settings of the strategy in the middle of the video. Toward the end of the video, I will drop the settings for the strategy. Right, so the strategy is a very simple one. All you need to do is just for you to check for your higher time frame, right? Check for your higher time frame. Your higher time frame can be your 5 minute time frame, it can be your 15 minute time frame, it can be your 30 minute time frame, and it can be your daily time frame, depending on the kind of the personalities, depending on kind of your styles of trading or your personality of trading, right? But for the purpose of this video, we'll actually be using the 15 minute time frame, right? Because majority of us are intraday trader, so we actually focus on the 15 minute time frame, right? So you go to your 15 minute time frame, you look at the trend. If you actually look at this now, we're actually having what we can call this, we can actually call this our this is a what we can actually call this as our as a ranging market. The market is ranging, right? So market is ranging, the market is ranging, so we can call it a we can call it um so we can call it a ranging market. So we have this range, right? This is the um so we have the high of the range to be this, why we have the high of the range to be this and the low of the range to be this. So the market is actually ranging from this area, between this area, right? The market is actually ranging on this area, so we can call it a ranging market. So we can call it a ranging market. So that's the range. So and on our 15 minute time frame, we can also still see that we got this massive expansion up like this, right? We got massive expansion up, so we can be having a all we're having now is just a retreat, a pullback to our POI, then we'll continue the buy. So meanwhile, we can actually take this sell down to our POI, and down to our POI, and that is what we have. Or probably they will just take out this I, right? To be at the safer side, we can still check further, right? You can still check further. So you can see on your 4 hours time frame, this is what we have on our 4 hours time frame. You can see on our 4 hours time frame, the range that we have is this is the high, and this is the this is the low. So the market is actually trading in between this area, and with what we've gotten here now, you can see that the price is actually very close to our sell area. So most likely we're having a sell, right? We're having a sell down to. So it doesn't mean that once we have this sell we can't have a buy. Obviously there's going to be a buy in the process like this. So for us to actually want to scalp this buy now, which we call the reverse, not we'll call it the reversal, right? We'll call it the reversal because the major trend is actually a downtrend. Right, so the major usually done up to when they take out this high, that's when you can start thinking of buying, and then they retrace back, right? So on that, to establishing that, now we can go down to our 1 minute time frame that we will use to scalp. So basically now the confirmation we'll be looking at for is just two. One is going to be on this area, on our main indicator area like this, and the other one is going to be at our indicator window like this, right? So that's the two confirmation we're actually going to be looking out for, right? That's the two confirmation we'll be looking out for, and the confirmation we are looking out for is very simple. It's a very simple one. All we need to do is that once we check for our higher time frame, I will actually confirm that we're actually in a downtrend, right? We're actually in an uptrend, sorry. So we can look to take out this buy here. That's what we're targeting. And if we actually had a set downward, then we'll look to take the retracement, which is this buy. So that's what we're actually going to be looking out for, right? So basically now what we are looking out for is that the process of looking out for a buy to scalp, we'll be looking out for our W pattern, right? And as for the W pattern, now we have different variations of the W. We have the normal M, we have the advanced W, right? Sorry, we have the normal W, which is like this, and we have the advanced W, which will always give us a divergence, right? On the price, this is what we always have a divergence, and we have the normal W, which is this, and we have the advanced W, which can be like this, right? So basically, how do you differentiate the two now? For the normal W now, right? Both the first leg and the second leg would apparently be equal. So in that case, you can call it your what, your double bottom, right? Then for the advanced W now, basically now the first leg will be longer, the second leg will be longer than the first leg. This is still your W, right? So basically you're going to be having a what, you are going to be having your divergence. You can have something like this. It varies, it's just variation upon variation, right? So once you see the second leg longer than the first leg, it's not possible for you to have the second leg to be longer than, to be shorter than. It's not possible. You can't have it like this. It's always going to be the second leg that would be that will be longer than the first leg, just to give you your what for divergence. For those of you that know divergence very well, we'll have the regular divergence, and we'll have the regular divergence, the continuation divergence, and what, right? So for those of you that know divergence very well, we'll have the reversal divergence that is actually telling you, is the divergence that is showing you that a trend is actually coming to an end, so you should expect a reversal. And we have done that will show you a trend is a continuous trend is actually what is going to be continue. If you understand, a trend is what is just a pullback to continue the trend, right? I've forgotten, we have the regular and I don't remember what the second one. So now that's what we're actually going. We'll be looking at for our W pattern. Alright, we're looking at for our W pattern. W pattern is a very powerful trading patterns that we have in the financial market. Your ability to be able to spot this W pattern really goes a long way for you, right? W pattern is more or less like, for those of you that trade, you always say that is a double bottom, and for the reversal part is the opposite of it, is what is our M, which is our double top, right? So your ability to be able to spot this pattern in the market increase your profitability in the market. It's not all about you just using indicator. Do you understand what the indicators is telling you? Can you read your pattern from the indicator that you're using? That's what gives you the real profitability that you need in the market, right? So without wasting much of your time, right? So once we ascertain that, okay, we're actually looking out for our W pattern. Now the W pattern can be two. Is that going to be our normal W, our regular W, or our advanced W, whereby the second leg is going to be larger than the first leg. So whichever one you have in the market, whichever one the market present to you, you just take it, right? Whichever one the market present for you, you take it and you are good to go, right? So that is what we're actually looking at for, right? So now the confirmation is that we actually have two indicators here. The first one, we have two indicators here, but let me say we have two lines here, or we have two lines here. The first one is this, my red moving average here, right? And the second one is this, my green moving average here, green line here, right? So those are the two confirmation we'll actually be looking at for on our main chart. And as for the indicator, we have two indicators here, right? We have two lines, this and this, right? So those are the two confirmation we'll actually be looking at for, and all we are waiting for is that we actually want, once we have the first thing, since we actually traded the reversal pattern now, so obviously there is going to be a spike. So once we have a spike to actually give us something like this, you can see that this is our lower high, this is our lower low, this is our lower high, this is our lower. So what we're actually waiting for is that we're actually waiting for the process whereby we'll have this the chart is able to show us our W pattern. Not only the chart now, not only price is giving us the W pattern now, the candle, the price is not only the price that is giving us our W pattern now, the indicator we are using to also shows us the W pattern on the main chart. So we already got into confirmation on this same main chart now. We've gotten to confirmation of this area now. The final confirmation we'll actually be getting now is going to be on this. Now on our main chart, on this our indicator chart, the indicator chart should also give us our W pattern. Obviously, if you can see very well, this is the second leg, right? And this is the first leg, right? And on our chart now, what do we have there? On our chart, this is what we have. Let me screen on our chart. Let me use red. So on our chart, this is the first leg, right? This is the first leg, and this is the second leg, right? That's what we have in the market, right? You can actually see that on our chart now. The first leg, right, you can see actually that. So this is the confirmation we are looking at for. If you look at very well now, we have our W pattern here, we have our W pattern here, we have our W pattern here on the chart. So the moment they cross, the whole moving average here cross together, and you look out for your indicator window. Now we've gotten our W here too, right? So the only thing you need to wait for is that now the black moving average now has to be, the black and the red now has to be at our buy level, which is our 20 level, right? So once they are below this area, you can actually take the trend and you take 10 to 20 candles, and you are good to go. 10 to 20 candles depending on hand size, right? So that's what. So once you have that, so the black and the red on our indicator window can actually cross together. If it's crossing together, is an additional confirmation, but sometimes they can be far apart like this. But once this black is actually at our 20 level or 10 level, below our 20 level, and is giving you the W pattern already, then you are good to take. So you take 10 to 20 candles, and you're out of the market. You don't need to be too greedy, guys. So this is another confirmation here now. This is a little bit of advanced W, right? But once you have the crossover of the three moving average here, of every moving average here, and you can actually see that okay, your red line is actually at the 20 level, you are good to take your 10 to 20 candles, and you are out. So guys, you don't need to be greedy. You don't need to be too greedy, right? So this is another one here. Just wait for the whole moving average to actually cross, and you're able to spot your W. Now look at this W now. You can see this is the first leg, and this is the second leg. This is advanced W. You can see what we have, right? So the moment you have this, you are good to go. You can see your is actually showing to, and is below your 20 level. So at this area you can enter. When you have it at this area, you can enter that the whole moving average here is actually crossing. So you can actually take your entry from here, and you take your 10 to 20 candles, and you are out of the market, guys. You have it very well. Because this is another one here. So you can spot your W here. Let me reduce. You can actually spot your W. Can you see your W here? Can you see on your main chart too? Can you see your W here? So it's all about the major thing you're actually going to be focused is going to be on this black moving average. So once it's at your 20 level, you are good to go, right? You are good to go. There is a lot of it in the market. All you just need is just for you to practice very well. Now you can see this is another W. Can you see this W? Right? Can you see it on the main chart? This is the first leg, and this is the second leg. This is our advanced W. Your ability to be able to read this pattern goes a long way for you. So once you have the confirmation like this, you can take your 10 to 20 candles, and you're out of the market. This is another one. Right? You can see. So let me walk you through the settings for the indicator. Let me walk you through the settings of the indicator. So for those of you that are new to synthetic indices, just click on this F here. Click on this F here. So once you have this F, so the first indicator we are going to is click on this F plus here. So once you click on it, you look for your moving average. That's the first indicator. So the period is 10, shift is 0, method is linear weight. Apply to weighted close, HLCC/4, right? That's so just make sure you can screenshot this so that you go and set it up on your account. So once you are done, you click on done. Right, so the last moving average of using our main indicator chart is the period is 5, deviation is 0.50, shift is 0, apply to previous indicator. Please take note of this. Please take note of this area. This is very, very important. That means actually you're actually using the previous indicator, which is our moving average. You're actually basing the parameter, the signal this Bollinger Band is going to give you. Based on that one, you should look at that and give you a current and most
updated in price history that you need in the market. So that's what you actually, so take note of this. Take note of it. It's very, very important. It's very, very important. So once you are done, you click on what? You click on done. And so you now click on this F plus again, and then you add our, the first indicator you are using is what? Is stochastic oscillator. And the stochastic oscillator, the K period is going to be default. It's going to be default. So the only thing you are changing there is just this color here. Right, so you change the color of your background, and you can change the style too, because you are not really using, the only thing you are using there is just our what? Our level. Right, so it's just our level. So you can click on this, and then you change the what? The style on this record, on this level, to be black. And once you are done, you click on what? You click on done. So the next moving average, the next indicator we are using now is our moving average. So the period is going to be 10, shift is going to be 0, method is linear weight, apply to what? Apply to close. So it's still going to be the same settings that we'll use on our main chart, right? So once you are done, you click on what? You click on done. And the final indicator we are using is our MACD. So the MACD to the what? It's still going to be our default setting. The only thing you are changing there is just this main chart. It's just this main chart. That's the only thing you are changing there. It's just this main chart. It's just this area. So only thing you are changing is just the color. So you change the color to what? It changes from whatever color to what? To white background, because we don't really need it. So once you are done, you click on what? You click on done, right? And then you have your settings like this. So guys, if you are, do your back test very well, do your back test very well, and note what works for you. Know what works for you. Is it the normal W that work for you, or the advanced W that work for you? So whichever one that works for you, you just need to do your back test very well and know which one works perfectly for you. Meanwhile, if you are here to subscribe to my YouTube channel, or you are new to the YouTube channel, click on that subscribe button and turn on the bell notification, and please do well to share this video. Let other people also benefit from it, right? As you never can know who you actually helping. Please, that sharing of this video is very, very important. Share with your friends, and I'm going to appreciate you. So let's keep making the reef. See you guys next time, when I'm going to be dropping another powerful strategy you can use to make your daily target, to make the reef your broker, and what? Meet up with your daily target. See you guys. Hello guys, what's up guys? Welcome back to my channel. Hope you guys are really making money with my strategy. Hope you guys are really making the reef with my strategy. So today I'm actually back with another powerful strategy that you can use to flip your $5 account to $100 account. Alright, watch this video today, and I'm going to be showing you one distinct thing that you need to do so that you can flip your $5 account to $100, right? Because the last video I posted, I saw someone who actually said it's not possible for you to flip your $10 account to $1,000 account in 1 week. And the most amazing part is that I actually I've actually look and just look away, right? And this same particular person have actually been commenting on my video like it's not possible, and I choose to reply the person yesterday. You know, the most wonderful part of it, the person saw my reply, he didn't reply. Rather, the person went to my price action video in my same channel and was like, he needed the part 2 of that video that talks about market structure. It's not as if I'm trying to just pull the person leg, but the real truth is that many of you actually look at things, and Forex is an industry, is an institute that is more like a guy who never attended primary school, who never attended elementary part of school. How will he be able to cope in secondary, or even tertiary, or even college? So that is where majority of you get it wrong. Where majority of you get it wrong is that the elementary part of trading, you don't really understand it. And I will keep emphasizing that you can never overweigh, you can't emphasize how important market structure is in trading. As a matter of fact, if you understand your market structure very well,
if you understand your market structure very well, that you are on 15-minute time frame and you can show the trend of 4 hours time frame, you can show the trend on 1 hour time frame. This gives you the maximum flexibility you need to do whatever magic. I call it magic in flipping. It's magic. But people actually look at this thing is might see that it's not possible. It's possible, my dear. It's possible. So if you actually want to be able to flip up your account, your $5 account to $100 account, watch the video to the end. I'm going to be showing a very distinct thing. One thing you never know that nobody has ever talked about as far as account flipping is all about. So meanwhile, if you are new to my channel, please do well to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. Right. So without wasting much of your guy, right, the hidden fact, the plain truth in flipping of account is that you can't just come. It's just like, let's take trading like, sir. So guys, so looking at, I said the first and foremost what you need to do is that you need to understand market structure. Market structure can never be overemphasized how important it is. You must be able to see your structure, whether complex structure, internal structure, right, or major structure. You must be able to see it whatever time frame that you are. So the reason why every strategy you have outside there does not work or is not accurate is that you've not been able to implement, you've not been able to blend it with your market structure, and that's why you keep blowing your account. So if you actually really want to stop blowing your account, it will do you good to understand, go and study your market structure, and don't just study market structure, study institutional market structure, study SMC market structure, or you study ICT market structure. All these things, they are almost the same thing, just a slight difference. So if you really want to be profitable and efficient, then you need to what? You need to study your market structure very well. So without wasting much of your time, so the strategy works perfectly on 1 minute time frame and 5 minute time frame. You can actually use any time frame higher than that, but for you to be accurate and be more profitable, then you need to work with this time frame. So the first thing is that the zoom level, you zoom out completely. This is the zero zoom level, or the first zoom level, whichever you want to call it, but let's take it to be our first zoom level. So you zoom out, this is second zoom level, and you zoom out, this is third zoom level. So we are using the zoom level 3, right? So now the second things we need to set now is that you see this line here, right? You need to drag your chart to be in the middle of this F, this dollar sign, and this F and our dollar sign. So you need to drag it to be in the middle of it, in the front of the X. So if you have been able to do this, you'll be able to set up your the necessary things that we need to do. So the next thing we'll be looking at is that now understand how the strategy works now. So the strategy works efficiently, and if you really want to flip that your $5 to $100 account, what I advise is that you work with your you work with Crash 1000 and 1000. Reason being that these two markets, Crash 1000, they are very volatile, that they give you enough they can give you enough pips. Little pips, they'll give you much profit, right? So that's why I strongly advise you work with these two pairs. Crash 1000 and 1000 is really going to do wonders for you. The wonder you need to do, all right, is really going to do the wonder you need to do for you. So after you're able to set that, so the next thing we need to do is that you need to go to, first and foremost, you need to go to your 15-minute time frame or 5-minute time frame, any higher time frame, right? Higher time frame. Obviously now, if you look at this now, this is what I'm saying now, that your market structure plays a very vital role, right? Now looking at this now, you agree with me that for those of you that actually trend line, these are all the things you use in the market that they really don't pay more attention, right? They really don't pay more attention. For those of you that trend line now, you have something like this. You have your trend line like this. You draw your trend line like this, right? Okay, you are in a You are in a downtrend. Obviously, you are in a downtrend. It shows you are in a downtrend, but it doesn't mean you can't take the little the internal structure of this downtrend. We call it internal. This is what we call the internal structure. This is what we call the internal structure. Right, this is what we call the internal structure. Now, this is our what? This is our lower high. This is our lower high. Then we have this as our lower low. Right, we have this as our lower low. Then we have this as our what? Our new lower high. And we have this as our lower what? Lower low. Our new lower high. Our new lower low. New lower high. New lower what? We've not gotten a new lower low, right? We've not gotten a new lower low. So obviously now, before we can actually get a new lower low, now while you are even waiting for that, now look at, there's something we call liquidity. This is a what? This is a liquidity area here. This is a liquidity area here. This is a liquidity area here, right? This is a liquidity area here. You can see this equal low. So obviously you should expect a spike that will come down to this area, right, to clear this liquidity, right? So if you are the type to actually enter for what? For a buy here, now obviously you'll be taken out of the what? You'll be taken out of the market. You'll be taken out of the market. So you check your what? You check your higher time frame and look at what? Definitely 3 minutes. 3 minutes.
Okay, 3 minutes.
So you check your what? You check your higher time frame to know the trend that you have. So obviously you are in a downtrend here, but doesn't mean you can't take the downtrend. So what you need to do is that you need to go back to your what? To your lower time frame, right? You need to go back to your lower time frame. Now this is our 5 minute time frame. So what you will doing is that now you need to look at this. So what you need to do is that once you check your lower time frame very well, you've checked your higher time frame very well. You've seen this what? The trend that you have. You've seen the trend that we are in the market. Then you can actually what? Come down to your lower time frame, like 1 minute time frame, and what? And scalp easily. So you'll be taking 5 to 10 candles easily. You take 5 to 10 candles easily without stressing yourself. Just take 5 to what? To 10 candles. You can take more than that, but taking more than that now, I'm not assuring you, if you are not very flexible or you don't understand your market structure very well and you've not done your price action very well, I can't guarantee you that if you take more than 10 candles, you will not be caught up with spike. I say will not be caught up with spike. So I can't assure you that. So once you establish that, okay, this is the trend that you have, and this is the trend that you have, so you need to go down to your what? To your lower time frame, like 1 minute time frame. So once you go down to your 1 minute time frame, now you need to see that, okay, obviously there should be a big spike like this. Now for the big spike like this, now you need to measure the spike. At least it must be more than 5 to 10 candles, 5 to 10 pips above, right? So this is 5 pips already, right? This is 5 pips. So once you have something like 5 pips, now you can easily take your 5 to 10 candles, because once they can give you 5 pips, 5-6 spike, obviously there will be a retracement. Now the ideology behind this thing is that it's not as if you just enter blindly for what? To take the 5 to 10 candles. There are things you look at. Now the normal ideology is that our market structure still plays a very vital role, right? So if you have something like this is higher high, something is going up. Obviously whatever that is going up cannot keep going up. There's a point it's going to reach, right? That's going to be the peak at that moment. So once you reach that point, now it's going to work. There will be a retracement coming back. So the retracement coming back now is that, you know what, you've seen this higher high. You've seen this higher high. You've seen this higher high, right? You've seen this higher high. You've seen this what? You've seen this higher high. Obviously, you've seen this higher high. You've seen this higher high, right? So you have this retracement, this expansion up. Now after this expansion, obviously there's going to be what? There's going to be a contraction. So there will be a what? There will be a lower low. So after this lower low, now there are things that determine this lower low, where this retracement will end. This is where your price action comes in place. There's something we call order block. There's something we call demand and supply, right? There's something we call POI. So once the ability to understand this thing, you can easily what? Anticipate where this retracement is going to start, and then you enter for that. So once you have this retracement, now this retracement that I'm talking about here, now this is the spike we are talking about. So after this spike, now obviously the market will go up. So when the market is going up now, in this situation, what's going to happen is that they will take out this high here. They will take out this high here, because this high is what we call a low high. Right? It's a weak high. We call it a weak high. A high that is not, because definitely the market is in an uptrend. So they will be coming to come and take out that high. This high is weak. because it's not as strong. There are stop loss lying above it, but the stop loss are very small compared to the stop loss that we have here. So obviously market is not coming down to come and clear this line. If market should come down and clear this line, then definitely we are not what? We are not in the what? We are having a change in market structure from an uptrend to what? To a downtrend. Right. So once you're able to what? To analyze this and see that okay, you've gotten this spike down, right? Then you enter for this what? This sell now, this buy up, sorry, rather this buy up is what we're actually targeting. So you take 5 to what? 5 to 10 candles and you're done. Because the truth part is that whichever range, right, this retracement here, right, this retracement here, most times is always going to be what? To be like 1/2 or completely. If it's not double of this expansion here, it should be double of this in like this situation. But there are some variants that will have that is not going to up to times 2 of it, right? So that's why I say okay, to be in between, take 5 to 10 candles and you are out. Take 5 to 10 candles and you are out. So once you have this spike here, right, usually what you enter now. So once you have this spike now, and this your what? This our indicator here is at this 0 level here. This is our 0 level here. Then obviously it's going to be at the down. This like I said, this candle here, this momentum here is going to be at the downside. So once you have it at the downside like this, you can easily enter for your buy. Take your 5 to 10 candles and you are out. Take your 5 to 10 candles. So this is an example here, right? This is an example here. You take your 5 to 10 candles and you are out. Take your 5 to 10 candles. This is another one here. Look at this spike. Just measure this spike. Once you have that, but if you mentioning the spike, you have you see you have 13 pips already, so you can easily take your 5 to 10 candles and you are out. 5 to 10 candles and you are out. 5 to 10 candles and you are out. So do your back test very well. I'm going to be sharing the settings for the indicator, right? The settings for the indicator. So we're actually using 3 indicators. So for this of you that you click on this F plus here. So the first indicator we are using is our what? Is our moving average. So the period is 10, shift is 0, method is exponential, apply to what? Apply to close. And once you are done, you click on what? You click on done. So once you are done, you click on so the next one is our relative strength index. The period is 14, apply to close. The style is 1 pixel. The level is 90 and 10 level. So once you are done, you click on done. Right. So the second indicator we are using is our MACD. So the fast EMA is 13, slow EMA is 24, MACD, a small SMA is what? Is 9. Apply to open. Main and signal, leave it in that way. Leave it in that range, and once you are done, you click on what? You click on no. So the last indicator we are using is our what? Is our moving average. The period is 1, the shift is 0, method is exponential, apply to close, and once you are done, you click on what? You click on done. So guys, do your backtest very well. Meanwhile, if you are yet to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification. Please do your backtest very well, and if you don't do your backtest very well, and if you don't yes ma'am, so do your backtest very well, and if you don't actually be able to flip it, you can challenge me, chat me up, check the description, you see the word, check the description, you see my contact there, chat me up and let me see that, because obviously you will be able to flip your $5 account to your $100 account depending on how versatile you are, and make sure you actually do your backtest very well. Yes ma'am. So guys, do your backtest well. Let's keep making the review. See you guys. So guys, welcome back to my channel. I welcome you back to the second version of this strategy that I call the Avenger strategy. Right, so last week I actually dropped the first video, the part 1 of this strategy that we call the Avenger strategy. I called it the Avenger strategy in the sense that this strategy is going to pay you back every money you've ever blew, every money you've lost to your broker is going to pay you back in manifolds. So that is why I called it the Avenger strategy. If you want to know how to avenge back on your broker, how to avenge back on those money you've lost while trading, then this video is for you. Watch the videos to this end. I've seen you guys feedback on the part 1 of it, so I've seen your guys part 1. I've seen you guys feedback on the part 1 of it that you say you need the complete video, so I'm actually dancing to your tone, dancing to your request now by giving you the full strategy on how you can
what avenge back on your brokers, how you can reap back all you've lost in trading. So if you want to know how to take back everything you've lost to your broker, then this video is meant for you. If you are yet to subscribe to my YouTube channel, please do it to subscribe to my YouTube channel and turn on the bell notification so that you're still updated each time I'm dropping a new comment. So at the first video, I actually gave out the settings to the strategy, right? And I did a very deep dive, the pros and cons of this strategy in the first video. So if you are here to watch the first video, you actually get the link to the first video at the description of this video and at the end of this video, so you will go and watch it. So I don't want the video to be too long, but nevertheless, let me just run a quick recap on the first video, the quick recap on the settings, because I've given out the settings in the first video, so I don't want this video to be long. But if you actually need a full understanding of how the strategy works, then you can go and watch the first video. So we're actually using 3 indicators of this strategy. So the first indicator we are using is our stochastic oscillator. The K period is 5, the D period is 3, the slow period is 3, price speed is low and high, method is simple. The style has to be the 1 pixel, then the color has to be the color of your background. So once you are done, then we are using the levels too. The levels is 80 and 20 level. So once you are done, you click on turn. So the second indicator we are going to be using, you click on that F plus again, is our Bollinger Band. The period is 14, the deviation is 200,000, shift is 0, apply to typical price, high, low and close. Right, high, low and close divided by 3. Right, then the style is 4 pixels, the color is blue. Once you are done, you click on done, guys. So the last indicator we'll be using is this envelope indicator. The period is 70, shift is 0, deviation is 200,000, method is simple, right? Apply to close. So for those that are very conversant, you see that you observe that the deviation we are using for both our stochastic, our Bollinger Band and our envelope are the same thing. Why? Because we are viewing the momentum, we are viewing the trend with 2 different indicators. So whichever one that gave us that, we can actually see what we need to see. Right, we can see what we need to see. So that's why we are using the same deviation for the 2. This is part of the cons and pros of this strategy, right? This is part of the pros and cons of this strategy. And if you observe very well, we're actually using 14 period on the Bollinger Band, but here we are using 70, right? We are using 70, and another time I'm actually going to tell you how we arrive at this 70 for this envelope, right? That is not what we are going, right? So once you are done, you click on done, right? So the final indicator we are going to be using is our stochastic. The final indicator is our awesome oscillator. So the awesome oscillator, just leave it like this, therefore the way it is, then click on. Then part of the first condition I gave out after the sentence was that we need to drag out, you see this line here, you see this, you click on your screen, you see this line here, you take it out to your F here, like this horizontal line, this vertical line, sorry, you bring it out to your F, right? So that's the first condition. Then the second condition is was our zoom level, right? So we are using zoom level 2, right? So once you have been able to set it up like this, you have something like this. So now for the condition, how do you use this strategy? Right? So in using this strategy now, basically we are putting into consideration just two things, and that is our Bollinger Band and our envelope indicator. So those are the 2 indicators we are actually putting into consideration. So the first condition is that you need to wait for a spike, right? So once you have a spike, this our Bollinger Band now is going to open up,
right? It's going to open up like this. It's going to open up like this. So once it's open up like this, right? Once it's open up like this, you can start taking your words. Once it open up like this, so if you open up like this now, that means the upper band is going to be at our 20 level and the lower band is going to be at our 80 level. It has to be. So once they open up like this, you can start taking your buy, right? But you must have a spike first. You must have a spike first before you cannot think of that. So once you have a spike like this, right, and this our Bollinger Band actually open up like this, and once it's open up like this, with the way, whichever way you want to open up, it must touch. Since this is a scalping strategy, right? So that means on crash 1000 we're actually going to be buying, right? And on crash 500 we'll be buying on crash 1000, crash 500 and crash 300, right? So once you have this spike like this, automatically the Bollinger Band must come down, must be at our 20 level, right? At our 20 level like this, and the lower band must be at our 20 level, the upper band must be at our 80, around our 80 level or above 80 level. So once you have that, right, once you have that now, so the second confirmation now is now that you now need to go back to your word, to our awesome oscillator. So now awesome oscillator now, it must have expand back, it must expand down, right? It must expand down, right? So it must expand down, right? So look at, after this spike like this, you can see it open up. You can see it open up like this. So you just wait for 3 or 4 candles to actually see where you are going. So by the time you wait for 3 or 4 candles, now it's going to give you this peak already that we have. So once it give you that like this, so you wait for your awesome oscillator, right? So your awesome oscillator must change, the color must change from red to green. It must change from red to green. That is what the confirmation. Listen again. The awesome oscillator is what is going to confirm your buy for you, confirm your setup for you. So it has to change from what? From red to green, right? It has to change from red to green after you've gotten this spike, right? After you've gotten this spike, right, this big spike, it has to change from red to green. So once it changes from red to green, it can be on the first candle or the third candle. Then you can enter and take your what, 3 to 5 candles, and in a maximum what, you take 10 candles. You take 10 candles, right? So after this spike like this, we have the what, the red changing to green at what, at our third candle, at our 5th candle, if I'm not mistaken. So if I then you take your what, your 3 to 5 candles and 10 candles maximally, you have this, you are out without being cut. So while you are taking that, it automatically is going to switch from what, from down to up, right? It's going to switch from down to up. So this is one example here. This is another example. You can see you have this big spike here, right? You have this big spike, right? So it changed here from red. It changed from here. You take your 3 to 10 candles maximum. Don't be greedy, guys. Just take 3 to 10 candles. Don't be greedy. Another reason why you lose money is that you are being greedy. You are being greedy. Now if you want to take, you just follow the instruction, 3 to 5 candles and 10 candle maximally, and you are out. If you follow the instruction, you will never blow your account again. You will never end up being caught with spike again, right? You will never blow up your account, and you will never end up being caught with spike. So if you actually follow the instruction, once it changed from what, from red to green, you enter for what, you enter for a buy and take your 3 to 10 candle maximally. If you use a right lot size, obviously you will be making your $50 to $100 daily target very easy. And for those of you that have a bigger account, you can make like $500, even up to $7,000 depending on your equity, right? Depending on your equity. So this is another example here. Right, this is another example here. You can see this is another example here. You wait for the spike. After the spike, right, you wait for it to turn. After this spike, now
your Bollinger Band will open up. This is our Bollinger Band. Our Bollinger Band will open up like this, spread up like this. So once it's spread up like this, after that spike, right, you wait for your awesome modulator here to change from red to green. That means it's changing from what? From red. Before you were selling, right? Then now you need to buy. So you buy at what? At support area. Buy is always green. You buy at green, right? So that is why you need to wait for the awesome modulator to change from what? To transform from red to green. The awesome modulator is what is going to confirm, to give you the final confirmation, so that you will not end up being caught up with spike, right? You will not end up being caught up with spike. So this is another example here, right? This is another example, right? This is another example. See, this is another example here, right? This is another example. Let's see, this is another. There are many examples, as many as possible. All you need to do is just for you to wait for the what? For the setup. Wait for the setup, right? Wait for the setup, right? Wait for condition to plays out. Wait for condition to plays out. See, this is another one. This is another example here. You can see you have many of it. I call it the Avenger. This strategy is going to pay you back everything you've lost to your broker. Just make sure you follow the instruction, follow the rules, and don't be too greedy. 3 to 10 candle maximally. 3 to 10 candle maximally. Meanwhile, if you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification, so that you stay updated each time I'm dropping a new content, right? So that you'll be the first one to get notified for it, right? This is another example. Wait for that spike. After the spike, the Bollinger Band will open up, right? Then your awesome modulator will switch from red to green. Once you switch from red to green, you can enter and take your 10 candles easily. You can get this. You can do this as many times as possible daily, right? You are not even checking the daily trend. You are not checking the 4-hour trend. No, just go to your 1 minute time frame. Wait for that spike, and after the spike, make sure your awesome modulator switch from red to green. Alright, guys, if you actually enjoyed this video, please hit on that like button and comment in the comment section. I would appreciate it if you are here. So do well to do your back test very well. I've been using this strategy for a very long of time. I just decided to give it out today. It is an Avenger strategy. You can make a massive money from this strategy. It is easy, so simple, and very profitable. Trading should be simple and profitability. So guys, this is the time to avenge back on your broker. This is the time to take back everything you've lost to the market. So let's keep avenging back to from our brokers. Let's avenge it back from the market, and by being profitable. See you guys in the next video.